How's everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk about the chaos at the FDIC. And for anybody who doesn't know, that is the Federal Deposit Insurance Corporation. So I just want to give you a couple things for how the week kind of unfolded with this. So you had basically 2 weeks ago, we had this bombshell report that came out on the basically cultural atmosphere at the FDIC, and then we had some kind of more as this story was unfolding throughout the week. So let's just take a look back at the week that was real quick and a couple of quick clips here. So the FDIC chairman Martin Gruenberg is ready to step down once his successor is confirmed. Until then, Gruenberg said he will continue to fulfill his responsibilities, including the transformation of the FDIC's workplace culture. So, he was basically he's saying he's ready to step down until a successor is confirmed. And so it looks like his resignation is coming pretty imminent. So, but not so quick. And then we get and then a couple days later, basically it goes into a successor for the FDIC Chairman Martin Gruenberg is unlikely to be appointed before the November elections, giving way for bank regulators to push through key agenda items ahead of a potential change in the administration. So, So, so basically Martin got a lot of pressure from the Democratic side of the aisle to basically not resign and not step down because they want to get their agenda slammed through here before November. Now, and then finally, we had the U.S. House Financial Services Committee Chairman Patrick Henry. He wants Martin Gruenberg to attend the second of a two-panel hearing scheduled for June 12th to understand how the latter plans to address the agency's workplace culture, American Banker reported. And Mr. Henry stated, your appearance is critical so that Congress can ensure its banking agencies are acting to maintain stability and public confidence in the nation's financial system, McHenry wrote in a letter to Gruenberg. Gruenberg said he is ready to step down from his role once a successor is confirmed, but again, meaning not till November. So I think that you are going to have a lot of fireworks come June 12th in that public hearing because again, what's interesting here is that, Mr. Gruenberg was not just getting pressure from Republicans to step down. He was getting pressure from Democrats. Like I think Maxine Waters, a couple other people were basically saying like, no, you gotta step down. You gotta go. Now, with all that playing out this week, I want to take a step back to the week that was, and then I'm going to show you guys a couple articles here real quick. So what happened basically? How did this all kick off? Okay. So what happened was, there were a ton of complaints at the FDIC. When I mean a ton, I mean hundreds. And it was really bad, and it basically forced the agency to hire a so-called independent third party. Now, the company that they hired was a law firm named Cleary, Gottlieb, Steen, and Hamilton. Now, what made this interesting was that I believe that basically Martin Gruenberg basically picked this law firm and then kind of had oversight over it, which made it really funky because it was like, well, wait a minute, how is this supposed to be an independent? If you're picking the law firm and then you're overseeing their work, basically, like how is that an independent situation? So, but that's not here nor there. The important thing is that this law firm came back and the report that they dropped was it was jaw dropping. Basically, their report found accusations of sexual harassment, discrimination, and other misconduct. It says that women in one field office recounted how, to their dismay, it became routine to hear their supervisors talk about a whole bunch of sexually explicit information. Even worse, senior executives with well-known reputations for pursuing romantic relationships with subordinate enjoy long careers without any apparent consequences. Perpetrators were sometimes moved to other offices or roles, but rarely faced discipline. Of the 92 harassment complaints made through the FDIC's anti-harassment program from 2015 to 2023, not a single one resulted in removal. Reductions in grade or pay or any discipline more serious than a suspension, the report said. In other words, they didn't have any of that. In addition, numerous FDIC employees, including senior executives, noted instances where Chairman Martin Gruenberg, who has been at the agency for nearly 20 years, lost his temper. His demeanor led to a chilling impact on open communications, the report said, i.e., how can I say this without using colorful language? Yeah, Martin's not a good boss. Yeah, that's what that's telling you right there. Martin's not a good boss, and he's a guy with a serious attitude problem that needs to go. Exit stage right. Now we get in here, and basically now we got some testimony on this, and basically, Gruenberg, who he faced questions on the report from Republican and Democratic members of the committee, said he is committed to addressing issues laid out in the report. The FDIC board authorized the review following media reports of misconduct at the agency, which I believe was first reported in the Wall Street Journal. During the hearing, committee chairman Patrick McHenry repeated his call for Gruenberg to resign, while ranking member Maxine Waters said the agency head is obligated to make sweeping changes. But then another article went on here to say, a new independent office of professional conduct will report to the FDIC board, will receive and investigate complaints and take disciplinary actions. Okay, so they're planning on making this new independent office of professional conduct. The agency is also working on implementing other recommendations from the report, including identifying and appointing a transformation monitor to observe and report on the agency's efforts, and engaging a third-party expert to support the agency's efforts. Okay, so now we got that. Now let's take a look at a couple of the articles here. So again, this kind of kicked off the week on Monday. So basically, this article says, FDIC chair ready to step down once a successor is confirmed. He is ready to step down as chairman of the Federal Deposit. Gruenberg's statement comes after an independent review, yada, yada, yada. After chairing last week's hearing, reviewing the independent report, and receiving further outreach from FDIC employees to the Banking and Housing Committee, I am left with one conclusion. There must be fundamental changes at the FDIC. Those changes begin with new leadership who must fix the agency's toxic culture and put the women and men who work there and their mission first, Brown said. Now, that was from Sherrod Brown, the Democrat from Ohio, and that's what I was talking about. Like, he came out and basically said, Gruenberg's got to go. But of course, Gruenberg said he will continue to fulfill his responsibility. With Gruenberg staying in his role, the 3-2 partisan split on the FDIC board is maintained. Many regulatory actions, such as the Basel III Endgame proposal, which key officials reportedly plan to finalize as soon as August, have been receiving partisan votes. In March, Federal Reserve Chair Jeremy Powell said the final rule is likely to be materially different than the original proposal. Let's see. In a note released after Brown's statement, Capital Alpha Partners and analyst Ian Katz said Brown did not urge Gruenberg to resign, and it seems the goal is to keep Gruenberg in his current role until the Senate has confirmed a successor. That would avoid having Republican Vice Chair Travis Hill take over as acting chair, and would allow Gruenberg to move forward with ongoing regulatory matters, including the Basel Endgame proposal. Katz wrote in the note, we have our doubts that this strategy will work and would be surprised if Gruenberg is still in the job a few months from now. Exactly the point that I'm going to get to here in a second. Now let's look at this second article here real quick. FDI leadership shakeup unlikely, paving smooth path for regulatory agenda. And this was just 2 days later on Wednesday of this week. So it is unlikely a successor for FDIC chair will be in place before the November elections, giving way for bank regulators to push through key agenda items ahead of a potential change in the administration. A not so simple Senate process. So shortly after Gruenberg released his statement on May 20th, White House Deputy Press Secretary Sam Michael said in a statement that President Joe Biden will soon put forth a new nominee. However, any nominee is likely to hit a snag in the Senate given partisan dynamics and Democrats' slim majority. Certain senators, like Senator Kyrsten Sinema and Senator Joe Manchin, could add challenges to the process of confirming a replacement chair. Moreover, the Senate will have little time to convene over the next few months because of holidays, recess, and election campaigning, further complicating confirmation. And then potential replacements, finding a nominee who will agree to go through the potential tumultuous political process presents another hurdle. So, and then potential for Gruenberg to resign earlier. There is a chance Gruenberg will feel more pressure to end up resigning without a successor after all. Is this something where the pressure stays on and he steps down? Or is it something that not that they are now that they have said he is not staying around, that we move on from? So, and it does say here, in the meantime, certain Democrats might move to urge Gruenberg to leave early, especially after Senate Banking, House, and Urban Affairs Committee Chairman Sherrod Brown called for a new FDIC head. Moderate Democrats, especially those who aren't fans of the Basel Endgame proposal, might also call on Gruenberg to step down now. Ian Katz, managing director of Capital Alpha Partners, wrote in a note, "We don't pretend to know how long this will take time to play out, but we would be surprised if Gruenberg can hold on until a successor is confirmed." Yes, and that is, I would absolutely agree 100% with that sentiment. This is an amazing story. I mean, how the culture at the FDIC got this out of control and how it kind of stayed under the rug for this long. I think that's, kind of the some of the bigger questions here. How did this stay covered up as long as it did? Chairman Gruenberg has been there for 20 years. Obviously, he hasn't been in charge for 20 years, but he's been at the agency, or he's been with the FDIC for 20 years. But he's been in charge, I believe, for maybe the last 5 or 6 years, something like that. I mean, he's been there. So he is obviously an enormous part of the problem. And the report that came out said as such. And so for him to kind of sit there and act like that, oh, everything's fine, it's okay, I've got this, we're going to make all these changes, I'm going to oversee all the corrections here that need to be made. I mean, it's just, it's absurd and it's laughable on its face. And, this guy's got to go. I mean, I understand that there is, politics at play here, that they want to the Democrats want to pull out their agenda and keep it rolling along. But this is bigger than that. This is so much bigger than that. You have a survey here, or surveys from this report, that basically say that 60% of the employees at the FDIC are considering leaving the agency in the next 12 months. So the question is, if you leave Mr. Gruenberg there, how many of those people are going to leave? And do you create a basically this mass exodus from the FDIC where you have all this talent, and who knows how many people leave that agency? And that would be catastrophic. I mean, for the banking system, the FDIC is critical in carrying out bank audits, every year. You can't just have the FDIC fall apart. You can't have that. I mean, if there was another banking crisis like in March of 2023, and you have a couple of banks fail and the FDIC fund has got to step in, well, you got to have the people there at the FDIC that, know how to manage that. When I reported on the Republic Bank failure, guess who came in and took over Republic Bank and then sold it to Fulton Bank? Is the FDIC. You've got to have these guys are very important and the FDIC is a very important, very integral agency to the inner workings of our banking system and how our banking system functions year in and year out. You cannot have this agency fall apart. You can't. You have to go in there and clean it up. I think Martin should resign. I think he should have resigned this week. I think he should resign immediately. But that's just my opinion. That's just my thought. But like I said, I will continue to follow this story. I'll keep everybody up to date on what happens with here. Like I said, I just think this is wild, and and it is kind of interesting. I'll leave on this. It is kind of interesting to note. Like, I remember when Wells Fargo was having all their problems a few years back, and I basically sat there and I said that look, this is a cultural issue. And it starts from the top down. It was driven by the people at the top, and it ran all the way down. And you weren't going to fix. And I still don't think the culture at Wells Fargo is fixed. but you were not going to fix that problem by leaving the people in charge. That was a situation where everything had to be cleaned out. The board, the executive team, probably a lot of the middle management, like a lot of things and a lot of people needed to go in order to try to fix that problem there. You cannot fix the problem by leaving the same people in charge. Cultural problems are top-down problems. They start at the very top, and they are driven down throughout the rest of the organization, whether it's a bank or a federal agency. It's the same. It's all the same. So again, you've got a cancer at the top of the FDIC, and that cancer now has to be cut out and removed. And hopefully, the next group of individuals that come in can try to fix the problem, or at least try to make it better. But like I said, Gruenberg, he's going to come in on June 12th, and I think he's going to get slaughtered in front of Congress, in front of the nation. But so I would think that he would have the common sense to step down before he goes and takes his lashings on Capitol Hill. But we'll see. But like I said, I'll keep everybody up to date with this story, and we'll see what happens. But if you like this video, please make sure to like, share, and subscribe. Please make sure to check us out on YouTube, Rumble, and all major podcast platforms. Please make sure to check out some of the other episodes that I've posted up this weekend. I hope everyone has a wonderful Memorial Day weekend. Stay safe out there. Get some good barbecue going, and I will see everybody again real soon. Thanks.